Happy New Year, everybody. Woo-wee. It is January 2025. We survived the holidays and first live stream of the year. Here we go. Welcome. I am Jen Sylvester. I'm your host today. This is the Savvy Home Seller live stream. We talk about all things in the housing market, and there's never any shortage of things to talk about over the last couple of years. So tonight, though, I'm going to dig into an article that I saw, some content that was very interesting about home builders and the abundance of inventory. Now, we know that there has been a ton of new construction going on in the southern parts of the country, and they have been building like crazy, more so down there than any other parts of the country. What I was surprised to learn is that their inventory levels, their unsold inventory levels, are at 2009 inventory levels. So I want to kind of unpack that, what that all means. Went behind the headlines, behind the article, did some research to find out exactly what those, the stats behind the stats, and then talk about whether that will flood the market and, number one, be the inventory that we need to get our market back in balance, or somewhat in balance, or in the right direction at least, or will it have catastrophic effects, or will it have no effect? We shall see. Hey, Nicole, good to see you. Nicole in the house. Welcome, welcome. Happy New Year to you, my friend. Good to see you. So, as we're going through here, just a little housekeeping. If you guys have any questions, make sure you pop them in the comments. Let me know where you're tuning in from. And if you have any questions, Nicole knows all about this. If you have any questions that you want me to answer live in your voice, not me impersonating your voice, but your voice, a recorded voice, call the number on the screen. You'll leave your name, first name, where you're calling from, and your question, and then I will feature your question live on the next live stream. Put a little animation behind it, all the things, and then I can answer it live. So just a cool thing. You can certainly come on the live stream, enter your comment, but this is so much more fun. And so dial that number. I'll bring that up a little bit later, and we'll get things going. Hey Hugh, Hugh Nugent. Good to see you. I think you were one of the winners on the trivia contest on our Christmas special, I believe. And I could be mistaken because I'm coming off of a little bit of downtime between the holidays, and I've got holiday brain, legit, legit holiday brain. So we're gonna get things rocking and rolling here. And this article that is Fast Company. And I like Fast Company. I think their data is good. I think they do a good. They do a good job with kind of outlining, getting a little bit more in details. A lot of these articles, it's all, surface stuff. It's all, just we know the market stuff. We know the inventory's low. We know that, prices are high and unaffordable. Tell us something we don't know. Hugh says that you got Jackie's mug. Fantastic. Love it, love it, love it. Those that are tuning in, watching on the replay, whatnot, if you had won one of my mugs, Savvy Home Seller mugs, it's on its way. The PO system, post office system in our country, it's 2024, and we have AI and all this great technology, and yet mail, I think, is still delivered by carrier pigeons and horses. It takes forever. But in any event, builders have the most unsold inventory since 2009. Here's what it means to the housing market. Number of unsold completed new single-family homes in October 2024. This article just broke a couple days ago, January 4th. Hit the highest level since August of 2009. Since the pandemic, the housing boom fizzled out in 2022. The number of unsold completed new homes has been on a steady climb. The number of unsold completed new single-family homes in October 2024, 113,000, was the highest level since August of 2009, 118,000, although still far below the all-time high in September 2007. Now, that's a significant date because September 2007 is when the great financial crisis kicked in, the market crashed, and builders were they were holding a lot of notes, a lot of money, a lot of unsold inventory. Prices plummeted 35% overnight. So a lot of builders were building solely on spec during that period of time, and they got burned badly. Polly, so glad you're here. Westfield, Indiana has had a huge inventory increase. Interesting. We couldn't afford to live there after 10 years, had to move two countries over. Quiet farmland. Not countries. Counties. 2 counties over quiet farmland. Nice. That's interesting. Indiana, it's I think there's so many pockets across the country, that the Texas area, Florida, they're getting a lot of press, but it's not limited to those areas for sure. For sure. The article goes on that says this raises the question: is rising standing inventory simply a sign that the new construction market is normalizing after a historic pandemic housing boom, or do builders, particularly in areas where unsold inventory is increasing the most, need to make further affordability adjustments, such as cutting prices or offering greater incentives? Yes. Cut the prices, cut the prices, cut the prices. They're already offering tons of incentives, and I'm going to dig into that in a few minutes. Did a little bit of research on that and how that compares to what happened in the 80s when the interest rates went up to 18%, 17%. But this is interesting. I mean, the thing is that the thing that what has happened over the last 20 years is houses are getting bigger and bigger and bigger. And you've got these McMansions, you've got, these large style homes. We don't need those. Memo to the builders. We need affordable housing, which means build something smaller, build something that is, that the average homeowner, the average American will buy. Not just first time home buyer, second move up home buyer. They don't need 33,000, 3,500 square feet. Start building something that is, actually the home buyers need to consume. I think that that's part of the problem. I think that the stuff that they're buying is just not appealing to the buyers that actually need and want to buy. And it's not that the buyers aren't out there. It's that they're not giving them what they want. They're building for the wrong audience. Just my 2 cents. But they're not asking me that. Hugh says that I don't see many new construction houses here in Maryland. Yeah, you know what, Hugh? The Northeast. So it's all about availability of land, right? It's all of open space. We have in Massachusetts, number one, and it's also regulations. The regulatory system it varies from state to state. So I'm not sure about how things are in Maryland. I know that in Massachusetts, where I'm at, the building codes have become even more and more strict. I was actually talking to one of my preferred referral partners today about this, and she does a lot of new construction, and she was telling me that the energy, the energy initiatives or the energy criteria for home building in Massachusetts has gotten to the point where it's ridiculous. So it's a combination of that and available land, available area to be developed that a lot of areas in the Northeast we just don't see as much happening. Sidonia 31, yes, the India. She says the Indy area is still going crazy with building. Very interesting. It'll be interesting to see if that affects the overall pricing. If that, what the turnover and if those builders are just keeping up with demand or if they're going to get behind the 8 ball like some of these builders. My tea tonight, the temperatures here are down in the teens. It has been cold, way colder than normal for our area. It's down in the, usually it's in the, 30, low 30s. So it has been dry in my house. So I've got my throat soother tea and honey, which if anybody wants to know what, wants the link to that, let me know, because it is, my daughter turned me onto it. It's fantastic. In any event, you don't need to know about what I'm drinking here. You want to know about the stuff. Number of unsold homes. So this is one of the reasons why I like Fast Company, because you know what, an article is an article, but like, show me, like Cuba Gooding Jr. would say, show me the money, show me the data. I want to see the actual data. I like graphs like this that show over time so you can compare. So as I mentioned earlier, this spike is when the great financial crisis happened, right? So that's when right at this area, this time period, that's when everything went south in a hurry. I mean, you can see the decline that we've had that was significant. This is where we're at now for new construction. This is for unsold, completed new construction homes. It's getting up there. It's absolutely, and this is what they're talking about. It's getting up there. Not anywhere near we were, during the great financial crisis, but it's been, that's a pretty quick, between 2022 and the end of 24. That's a pretty significant incline in new construction. So the article goes on to say, hey, Clark, Happy New Year, my friend. Thanks for jumping in. I hope you had a good holiday season with the fam. The article goes on to say that a couple viewpoints. So Meritage Homes CEO says they're building more spec inventory because they're expecting a strong 2025 spring market. I've heard this a lot. I'm a very optimistic person, but I'm also cautiously optimistic. I'm almost also a realist. And I think a lot of people are talking about this 2025 spring market season. Sometimes it reminds me of, if you want it to be and you wish it to be, then it'll happen. I kind of feel like sometimes that happens in the real estate industry. It's like, if we talk about it more, if we talk enough about it, we'll influence the general public and it'll actually happen. And it's like, well, that didn't happen last year. Now, did it? Everybody's rooting for a busier market last year. And there is some data to back up a market that's different. 2025 will be different than 2024. I think the big question is how different and in what way. So, he goes on to say that he says, speaking on CNBC in December, Philip, let's call him Philip Lord, CEO of publicly traded home builder Meritage Homes, said that rising new home inventory isn't bearish for builders. He says that inventory is definitely up across all the markets. Both existing home inventory is slowly coming back, and then new home construction is definitely up as well. But that's really intentional. But that's really intentional by all of us home builders. We still see an opportunity to fill that void, not enough existing home supply, which is the truth, by providing move-in ready inventory for all these customers that can't find the inventory in the existing home market, which is traditionally where they shop. So a lot of new home builders are building more spec inventory to really fill that void. Spec inventory is something that's where the builder will build before they have a buyer. And that's one of the things that happened during the great financial crisis is these builders got ahead of themselves and they just built to build, and you'd have all these empty homes with no buyers. When that happened and the builders put the brakes on, while the builders said, I can't, they completely left the industry, or they went bankrupt and got out. The ones that got in were very cautious and they did on demand. So you would put a deposit down on a new construction and then you're waiting 6 months or 9 months to have the house built. They're not doing it. They stopped doing spec homes for a long time because of how many builders got burned during the great financial crisis. So the fact that this is starting to come back a little bit now is interesting. It's interesting. It means that the home builders have more confidence, and they've been talking about this for months. They've been talking about, National Association of Home Builders has been talking about their increased level of confidence in the industry and then being able to, contribute to the housing inventory. We didn't have this housing inventory issue before the financial crisis. That didn't exist. We do now. So there's a valid reason from their mindset of why they should do this. The problem is there's so many other factors that have influenced the general public and buyers that puts the brakes on with actually these things being sold. So he says there's more speculative bill inventory to really fill that void, and we're all expecting a strong spring 2025 selling season based on what we're seeing today. So again, this was the end of December. Housing analyst Kevin Erdman thinks it's bullish, not bearish sign for builders. He says most of the time, the number of completed homes for sales rise because there is a demand for them. That has never been more true than it is today. He says normally we might worry that at the end of a cycle, declining sales will lead to one last unsustainable increase in completed homes for sale. In today's market, builders need to keep working to add more completed home inventory, so that sales can increase. Rising inventory is bullish here. So again, he's kind of backing up what Lord said, in the sense that we need more inventory. We need this thing to happen. The builders they're not being overly optimistic. They're being realistic and what they see happening. And I think that, not to, we don't know what's going to happen in terms of the political arena. And once the new cabinet, once the new presidency comes in, and what changes there's been a lot of discussion about changes that might impact the housing industry, and specifically the new homes construction industry. So, whether it be, immigration and workers and laborers. We already have a labor issue in this country and a shortage of skilled laborers. Tariffs could potentially make building supplies more expensive, which will cause some builders just to say, you know what, I can't build at that cost, so I'm out. Or they'll raise prices, or do it. It won't be it'll pull back on the affordability. So could they possibly be doing that anticipation? Maybe. I don't know. I might be just theorizing here, but you guys get to hear my train of thought on these live streams. Let's see. Clark, what do you got to say? You said, I just got home and your monkey made the mail today. Love it. You got it. Right back at you. Awesome. Love it. Love it. Got mine right here, my hot tea. Enjoy. I appreciate being on the stream every week there, Clark. I'm going to have you on again very, very soon. By the way, I've got the poll that is on the live stream. Feel free to chime in on that. I'll get the poll results when we end the stream. And interested to see what the there's another poll on my community page. Interested to see how many people are, putting the brakes on this year because they're not quite sure what they're going to do in terms of thinking about selling. But in any event, and then this Rick oh gosh, my pronunciation tonight is terrible. Palacios Jr. Palacios, we'll just go with that, right? Just call him Rick. High standing inventory could prompt builders to offer discounts or slow down activity in Texas, in Florida, suggest housing analyst Rick P. Home builders are heading into 2025 with the highest standing inventory since 2010, elevated mortgage rates, more resale competition, and the new home industry's push towards spec construction are all contributing forces. Standing inventory varies locally, with Florida, the Southeast, and Texas all at cycle highs. According to our survey work, these three regions represent the meat of the new home market. That I would agree with. So any strategic slowing of single-family starts due to this shifting supply backdrop will have a major implication for overall industry growth numbers. We're already seeing single-family starts activity cool more than expected seasonally through November. So and seasonally, you're always going to see a cooling in the market in general, through the winter seasons. Although they do build year round, especially down the south coast areas. But it'll be interesting to see how that plays out. Now, I wanted to kind of jump into just the data behind the data. So I pulled up, this chart from the St. Louis Federal Reserve that they do, I pull a lot of my data from this source. And this is through the end of November. But it kind of shows, the new houses for sale by stage of construction, and kind of shows you the dip, and we're again, the great financial crisis, on our way back up, in that regard. But here's the thing: it looks like a lot, but it doesn't tell the whole story, right? It doesn't tell the whole story because of the fact that new construction is only a small part of the some of the parts in terms of available, and not everybody's buying new construction. Not everybody's buying houses in Texas and Florida. Clark, yeah, you know what? We've had this conversation there, my friend. That Clark is down in the Atlanta area, and he says we have a lot of new construction home builds down here too, bringing about standing inventory and builder incentives. Yeah, you know what? I'm going to jump right into that because I did a little digging. And I came across an article, and it was talking about the building incentives. I kind of alluded to it a little earlier. I'm going to jump back to that other article in a second. But this article was earlier last year. I can't say this year anymore. Just curious, who is still saying 2024? Drop it in the chat, because have you written a check? If anybody writes checks anymore, or written anything with and put 2024. I mean, we're 7 days in, right? 7 days, almost 8 days into the new year. Everybody still is I'm curious to know. Inquiring minds want to know. This article kind of goes into what you're talking about here, Clark, with the builder incentives, and that has been on the news, for several months, with some of these builders really pushing, builder incentives to get their stuff moved, to get their homes moved, because, they're building on spec. The longer they sit there, the more money it costs them. And it says, this article is home builders resurrect the 80s era playbook in response to housing market affordability pressures. It says, while some home builders have responded to spiked mortgage rates by doing straightforward price reductions or cash incentives, the preferred affordability adjustment this cycle among many prominent builders is offering mortgage rate buydowns. Look no further than Lennar, which I've heard of. They've been in the news a lot. A home builder ranked number 119 on the Fortune 500, which is presently promoting, well, this was back in April, FHA buydown program featuring a rate of 3.75%. in year one in Colorado. And after that, a 4.75% for the balance of the term. So when you have that buy down, for those that may not know, when you have a buy down, it is super, super, super important. And I remember someone asking me on a live stream several months ago when I had this discussion. And, a lot of these builders want buyers to go directly to them. They want to be able to do that because then they can cut out the buyer agent, number one, avoid having to pay a buyer agent fee, and avoid having to deal with a buyer agent. That puts the buyer at puts you in a very exposed situation. Even if you are, a seasoned buyer, yes, you can bring in an attorney, but the attorney's not going to, go to the final walkthrough. They're not going to go through every visit with the builder, and so on and so forth. So, but one of the things that you need to watch out for are the terms of some of these deals that they're offering. And you got to be really careful. I mean, a buy down typically would mean is they're agreeing to pay down the rate. If the rate is at 7% and they do a 3-2-1 buy down. So what's a 3-2-1 buy down? Well, that means it's the rate is brought down by 3 points the first year, 2 points the second year, 1 point the third year, and then they're gonna state what number 4 through 30 what that rate's going to be, and it could be readjusted to whatever is the market rate at the time. Which means if those rates go back up to 7%, 8%, 10%, well, you're stuck. Number one, you need to read the fine print. You need to read the fine print and be very, very careful because they will. It's kind of like buying a car in that regard. I just helped my daughter. She just bought her first adult car. She graduated college, and I went with her to good old ma. It was the guidance. Been around this. Been around the barn a little bit on buying cars, and so I went with her, and they some are good, some are not so good with these car dealerships, but they very much, it's all about enticing with the rate, and not the rate, but the payment. And it doesn't matter. You start looking at the fine print and you're like, wait a minute, this payment is for a 7-year loan on a car. Says you're not doing that. Don't do that. don't do that. So you got to read the fine print. You got to look at all the different things, having a set of eyes, whether it be another agent. Even if you're working with an agent, I would still have an attorney review builder contracts. Hands down. Let's see, I want to catch up on these comments. Melissa, good to have you here. The check writing went fine on Sunday. I didn't haven't needed to mention or write the year. Oh, I was the 2024. My short-term memory, boy, the older I get, the more the short-term memory stuff is struggling, which is great for my kids, because I'll ask them to go do something around the house, and then like 30 minutes later, they know that I'll forget that I asked them. Clark, paying to buy down the interest rates. Yes. Sidonia says, I'm really surprised there aren't any builders out there willing to build smaller homes, less profit, but couldn't it be somewhat made up with volume and demand? Yes. And honestly, I think what's happened, and I've been kind of banging this drum for a while. As much as it pains me to say this, the government, whether it be local government, federal government will likely not get involved, but the local government, state governments, there's got to be some incentives given to these builders, because not all builders are big builders. Not all builders are building, full neighborhoods, where they have a lot more leverage in their profit margin. You have a builder that's doing one project at a time or 5 homes at a time. Their profit margins are a lot slimmer, but if they get incentives by the state, I mean, in Massachusetts, there are 40B incentives. There are incentives to build affordable housing, so that you will get granted approvals on building permits on a neighborhood if you include a certain number of affordable housing. And all that means is not putting an apartment complex in the middle of a beautiful single family home development. What it means is they agree to build a few homes that meet the median income for that area, so on and so forth, so that to make them more affordable. Something along those lines, Sardonia, needs to happen, because at the end of the day, builders it's a capital society, and it's not always greed. And builders, I mean, they're laborers. It's everybody's just trying to survive. When eggs are going up to $8 a dozen, pretty soon we'll all be buying eggs at the local market and selling them on the side of the street at a markup to make money. But it's just like everybody's trying to just survive, and some builders are shysters for sure. But it's just hard. It's just very hard. But I 100% agree with you. I think that would be a huge, imagine if we've got all this, affordable housing that is new. Now these home buyers can get in, these first-time home buyers, these move-up buyers that are not looking for these huge homes, can afford to do that. All that would do is make it an easier barrier to entry. We'd increase the amount of inventory. When you increase the amount of inventory, the demand is reduced. When the demand is reduced, the prices soften, because there's not enough demand to push the prices up. It would all work out. Mr. David Matney in the house. Good to see you, my friend. Hope you had a good holiday. Of course, some of these small builders down here ran out of money, and another builder came in to finish out the subdivision. That scares me when that happens. That scares me. It scares me that a builder runs out of money in a huge way. You would hope that these people would have enough reserves. If they're running out of money to do that, what kind of corners did they cut when they were actually building? That's a little unnerving. You wonder, and I would be going through, if I were to buy a home in a subdivision where the builder went belly up, and we saw this during the great financial crisis, where a builder would, a builder would walked away from a development, and the place was half completed and vacant and empty and open to the elements for months, 6 months, 9 months. Another builder comes in, takes over the property. Now they're trying to finish it. But guess what? All the plywood, all the lumber, everything's been exposed to the elements for a long time. Now, lumber by its nature, it sits outside. That's why they have a thing called lumberyard. I think it's a lumberyard mold is what they call it, where you'll actually have, plywood that is blackened, and it's not actual mold. It's just, but when it was sitting in the lumberyard, it didn't have enough time to dry when they built the house. And, it's, the type of thing where, what happens if that's the case? What happens if that's the case and the builder has run out of money and they may have the shortcut? I don't know. It could be a recipe for disaster, in my opinion. I don't know. What do you guys think? Let's see here. The article goes on to say that it says, of course, these buy-downs are hardly a new concept. They're an echo of the past. In the early 1980s, home builders faced affordability strains much like today, and builders turned to mortgage rate buy-downs as they do in 2024. The big difference was that in the 80s, they were dealing with interest rates that were like 15%, 16, 18%. So buyers pulled out. They couldn't buy it. That was, even though the rates, and I think this article goes on to say that, here we go. This is, there was an old article and it says from August 1980, the builder was advertising a 9.75% mortgage rate at a time when a 30-year fixed mortgage average was 12.95%. This was a tweet. Remember that, Twitter? Sounds familiar to you, right? By the way, prices started at $110,000, which is laughable with 2024. Yet many buyers stepped back from the market that year as volumes were down 20%. So it was $110,000, but buyers still backed out. Why? Because the wages and the home values, home prices were out of whack like they are now. And that's the difficult part and I actually wanted to dig a little bit into that. I wanted to first, though, getting back to the building supply situation and what, I wanted to talk a little bit about what is actually included in the inventory, like how we measure inventory, because inventory, it's very, very subjective. Sometimes I get a lot of comments on my channel that say, there's plenty of inventory. There's for sale signs all over my street. It's like, well, that doesn't necessarily tell you the whole story. You can have a lot of for sale signs in your town, but it doesn't necessarily mean that your inventory is back where it should be. Real estate agents, I will tell you, in being in this industry, 28 years, big surprise. They sometimes don't do what they're supposed to do. And one of the things they're supposed to do is when the house sells, take the sign down. That doesn't happen. You may have a deal that goes south, an agreement that goes south, and it's off the market. The sign doesn't come down. You could have a for sale sign that it's under contract, but it still says for sale. Doesn't always tell the whole story. So you can't always trust what you see. And that's why, again, say it with me, guys. Data. We like the data to back up what's happening in the market because otherwise you just don't know. I'm going to get to this right screen here. Oh my goodness, who's running this show? So that brings me back to the thing that I wanted to talk about, which is month supply of inventory. What the heck is month supply of inventory? This is the type of thing when we are looking at like how, the numbers, like somebody could tell you like, oh, there's 500,000 houses on the market, 115,000, 400, we need 1.4 million. What does that even mean? Like, how do you digest that? And every market, because every market is different, every market's, saturation and buyer demand is different. Every market's, the size of the market and the health of the market, everyone is different. So how do you measure it? And you measure it by month supply of inventory. And what that is in any given time, how long, if the spigot turned off and there's no new homes on the market, no new inventory period, either new construction or existing, and nothing new comes on the market, how long would it take at the current rate? How long would it take to sell everything on the market? And a healthy market is 5 to 6 months. If you have a level of inventory that takes 5 to 6 months to sell at the current rate with no inventory coming on, that's a healthy market. That's a more balanced market. Okay, 5 to 6 months. We're not anywhere near that. We're not anywhere. A good chunk of the country is down under 2 months. Massachusetts is, in my area anyway, a little over a month still. I mean, we're down to like, a quarter of a month during pandemic. But this kind of, if you guys can see this is, month supply of new homes. Talks about in terms of the new construction homes, which kind of, again, shows that those dips, but it also shows us, when they say there's a surge of inventory of new homes in the market, what does that mean? Well, as of October, like these means the date here for the Federal Reserve, they're tracking, their data goes to the end of November. Okay, on this. So at the end of November, 8.9 months. 8.9 months, and this is why these articles say that the inventory is flooding, is because that exceeds what a balanced market would be. A balanced market would be 5 to 6 months. Okay, even here, May 6.9, December 21, new construction was actually at a more balanced market, 5.6 months. Believe it or not, for new construction only, right? Not all of inventory. New construction is only a small portion of the total inventory. But that's why I just wanted to show you why that, that is what, where are they coming from in this article where it seems like, well, there's so much or whatnot. Let's see. David says, how about trying to find affordable inventory? That is a real challenge. You're not kidding. That is the, you kind of feel like you're on a oh gosh, I can't even think of the name of the series here. With Frodo Baggins. Oh my gosh, my brain's not working tonight. Lord of the Rings. Good grief. So you're on a Lord of the Rings quest to find affordable housing, and the ring that controls it all is the affordable housing ring, and nobody can find it. Yes, I'm a big geek. So here, this would be, I wanted to show you, this is just the, combined inventory now. If we had, aside from having new construction inventory, it's separate from existing inventory, this is where we are in total. And this is that 1.4 million number that you hear a lot about, July 2016, more of a balanced market. And this is where things went south during COVID. We had a little bit of an uptick when, buyers came out in droves. And then we had downturns when the rates went bonkers, when the rates went from 3% to 4% to 7%. There was a little bit of an adjustment at rate. The rates went down in 2023, and then they went back up and they stopped. Things went back down, and things have the inventory has continued to climb because this is that 2024 market that we've been in. Let's see if I can make this a little bit even, focus in a little bit more. So the 2024 market has been steadily rising. We're still so far. I mean, we still have easily 500,000 we need to get to where we were, to get into more of a balanced market, to get back even to where we were before 2019 across the nation. We have pockets that are recovering, but it's just pockets. It's not enough. So in any event, so what does it mean? Like the high new home inventory. So if we know the numbers and we can see the numbers, what is like, so what does that, what does that mean? And I thought this was interesting. This came directly from the National Association of Home Builders. They published this in July. But I thought it was a good article to share with you guys to show that the number, the explanation behind the numbers. And it says, in the census May 2024, newly built home sales data, the current month supply of inventory is 9.3. We just saw that, right? I just showed you that information. Some analysts have noted that given the 5 to 6 month benchmark, that this means the building market for single-family homes is possibly oversupplied, implying declines for construction and prices lie ahead. That is what 100% what you would think. If it's above the 5 to 6 months, the benchmark of a stable market, it doesn't make sense that it wouldn't be that. But anyways, it says, however, this narrow reading of the industry misses the mark. First, it is worth noting that new home inventory comprises homes completed, and this is where it got really interesting and why I wanted to share this article, because I think that this is that story behind the story that I mentioned earlier, that I alluded to earlier. Like, there's the data, and then there's the data behind the data. It's what, pull back the curtain to the odds, and tell me a little bit deeper, or even another way to look at it too. But it says, first, it is worth noting that new home inventory, that's tracked inventory, comprises homes completed and ready to occupy, homes currently under construction, and homes that have not begun construction. I'll say that again. So those numbers that they're talking about, those total numbers, 9.3 month supply of inventory, it's not just the ones with the signs in the ground that people can come in and buy, put deposit on and close. Those are the new inventory that includes those. The ones that are in the process, maybe under contract, may not be, but they're in the and homes that haven't even begun. So you have a builder that has a 50-unit new construction neighborhood. The data is going to show that 50 units are available when maybe 40 of them haven't even broke ground. That data is skewed big time. This is why we haven't seen massive price reductions. We've seen some because these builders need to move, and buyers, because of the affordability issues across the board with other factors, interest rates and all the things, wages not being able to keep up and whatnot. They're providing these incentives, but it's not because of these homes. You have a picture when you say, oh, it's oversupply of inventory, and you have in your mind of, rows and rows of houses, with the Tyvek wrap flapping and all the things. No, this is not the case. The data is tracked differently than you might think. It says that is, new home inventory is a measure of homes available for sale rather than homes ready to occupy. In fact, just 21% of new home inventory in May comprised of standing inventory of homes that have completed construction. 21%. So all of that 9.3 months supply of inventory, only, just over 20% is actual saleable inventory. I thought that was fascinating, absolutely fascinating to understand, because I think that it sounds more, it sounds more sensational to put on a news article that the market is, absolutely, there's a flood, there's more numbers, and maybe, to try to leverage, not to say that it's all conspiracy theory. I don't want to go down that road with a lot of how this data is handled. But the reality of it is data can be manipulated. I know I kind of bang that drum pretty loudly about relying on data, but you also have to be, you have to advocate for yourself and make sure that you research, where the source of the data is, and what that data actually represents. It says that more fundamentally, an otherwise elevated level of new home month supply is justified in current conditions because the inventory of resale homes continues to be low. Indeed, according to the National Association of Realtors, the current month supply of single-family homes is just 3.6%, well below the 5 to 6 month threshold. The vast majority of homes for sale are in the resale market. It is this lack of inventory that has produced ongoing price increases despite significant higher interest rates over the last 2 years. Fact. National Association of Home Builders estimates that the combined new and existing single-family home inventory is at a 4.4 month supply, which qualifies as low. In other words, overall current inventory levels continue to support, on a national basis, limited gains for home building and upward pressure on home prices. This is the thing that has just been fascinating, and because of the separation between the different communities, the different parts of the state. And it is a tale of two housing markets, because, and it's almost, it kind of defies what is common sense. You say, well, gosh, there's the prices are going up. The buyers, there's not a whole lot of it's not like 2020, 2021, where people were lining up down the street. That at least made sense. But now people are not lining up down the street. And yet, when the new homes come on the market, when a new listing comes on the market, my area and other areas that still have that low threshold, low month supply of inventory, other agents that I talk to on a regular basis, they're all seeing the same thing. It'll sell right away, sell at or a little bit above asking price, and there's no reason for downward pressure. The only reason you're going to see listing, if you are out there looking for a house to buy, and you see in a market that has a low month supply of inventory, and that would be something that I would want you to advocate for yourself. This data is available to the everyday consumer. This is nothing, none of this stuff is under lock and key. Only real estate agents have access to. Everybody has access to this data. I would find out whatever market you're looking in, find out what that month supply of inventory is. And then find out if that month supply of inventory in your particular area is low, and you see homes that have been on the market for 3 weeks, 4 weeks, 6 weeks, red flag. That means either there's something wrong with the house, it's overpriced, or there's something wrong with the seller. The seller's being stubborn and not being, come to terms, or they're getting bad advice. Imagine that. They're getting bad advice from their real estate agent, because the real estate agent sometimes unknowingly is doing a bad job because they don't read and study the market. So they're going by what they hope to be true. Like I mentioned earlier, if you wish it to be true, maybe it will be. You say, well, it's got to be this way because, instead of just doing your homework and acknowledging what is. Let's see. David says, great point of construction. Awesome. Clark, yeah, some states have no new construction while others have too much, 100%. Almost every day we get a new construction sales agent stopping by our brokerage, dropping off flyers about the subdivisions they're selling. That's crazy. But you know what? That's the thing is that, I'd be curious to know what your month supply of inventory is. You may have mentioned it for your area right now and how that new construction is affecting your overall inventory, if it's bringing it back to balance or not. And if you're seeing those big savings and whatnot. So I just want to take a quick, let's see here. We'll take a quick break here from conversation. And I just wanted to, a quick reminder that if you guys have questions during the week and you want to call in, I'm getting this button to work. Oh, my buttons are not working today. There we go. You can call, leave a voicemail. It's just a regular answering service. Call, leave your first name, where you're calling from, and your question. If you have anything real estate related, anything from this live stream or any other live stream, or if you've got a particular question on, your personal situation. If you're trying to buy or sell and you're kind of stuck, you don't know what to do or whatnot, call it in, leave the question, and then I'll put it on the live stream and answer it because I want to be here to help you. Because of the fact that there's a lot of agents that aren't doing exactly that, and I want to be able to provide you with the information so that at least you can take care of yourself, protect yourself. But call that number and leave me a message, and then we'll put a cool animation behind it and have some fun. So I wanted to dig into. Actually, to your point there, David Matney, about the affordability crisis. I had there was an article posted a couple days ago about and I mentioned this earlier about, the wages and prices, not jiving. And there's such a big gap. There's a huge gap, between the two. And that's what's causing this whole issue. It's not a lack of wanting people wanting to move. It's just the fact of not being able to, I'll be honest. If eggs started going up to like $50 a dozen, I wouldn't be buying eggs. That blows my mind that there's an egg crisis because of, what is it, bird flu? But anyways, housing affordability crisis. Prices won't fall without a 40% drop or a 70% wage boost. That caught my attention. 70%. So let's see what they say. It says, according to Moody Analytics economist Matthew Walsh, restoring 2019's housing on affordability levels requires U.S. home prices to fall 40%, wages to rise by 70%. It says November data from Redfin shows that median home sale prices have reached $430,000, up 5.4% from 2023. Zillow reports typical home values at $357,000 and change. The experts forecast the continued price growth in 2025, albeit at a slower pace. Moody's projects 1.5% appreciation as inventory expands. And there's such a wide range right now. Redfin is saying there's going to be a 4% rise. Zillow is anticipating 2.2% growth. I think the National Association of Realtors is predicting a 2.9% growth. Does anybody else want to throw in a prediction while we're at it? I should actually do a contest. You know what? I'm going to do a contest. I just thought of this on the fly. I'll bring it up again, but it'll be fun to see how this goes. Drop it in the comment or drop it in, in the chat or in the comments after the live stream. Tell me what your prediction is for this year. Tell me what the percentage is. And you know what? Whoever gets the closest at the end of the year will get a prize. For sure. So I will, you know what? I will probably make it a little bit more formal, and have you guys do a little quick, just so I can track, your poll, admission and all that kind of stuff. I'm not giving away tickets to Aruba or anything, so don't get your hopes up. But I think that would be fun to do, to see who is closest, because at this point, I feel like everybody's throwing out a number: 1%, 1.5%, 1.7%, 2%, 3%, 3.567%. Who knows? I think the underlying message, though, it's going to be growth, not the other way. Clark says that in the entire Metro Atlanta market, as of December 2024, we're about 3.5 months supply. But just in Atlanta, it is at around 4.4. These factors in both resale and new construction. Yeah. So, you're in the same boat then, it's not, so the new construction sales, they're just trying to get on board with, they're competing against each other. Sounds like, I think it's coming down to the fact that, I would bet, not knowing your market at all, but I wonder, and they're not, if you have a need, and the sales aren't happening, they're not filling the need. They're not building the right houses. Plain and simple. If you have a bunch of college students that need new cars, and the only car dealership is a Mercedes-Benz dealership, unless you're in like California or LA or something. What do you think is going to happen? The Mercedes-Benz dealership is going to go out of business because they're not filling the need. They need affordable cars, not those. So I wonder if that's that, that would be my 2 cents. It says for the year ahead, we expect continued slowing in house prices. Walsh told Newsweek in a housing market analysis. A lot of that is due to continued low demand while inventories start to come back online. And what I think is really a continuation of the trends that have started in the second half of the year. Mortgage rates remain a key variable. That would be another contest. I should have 2 contests on the mortgage rates and home inventory, home price appreciation. Zillow senior economist Kara expects rates above 6% through 2025. Redfin is saying 6.8%. What do you guys think? I think rates are going to be, I don't think they're getting too low. I mean, who knows? When we have the new administration come in, there will be changes. There will be things that get, addressed and some things that won't and all the things. But the thing of it is the stock market's doing well. And if there's no downward pressure from investors, there's no reason for the rates to go down. So it really is, it's something that we'll be interested to see. I think, again, hopeful because it would be beneficial to housing market, the buyers. But the reality of it is I don't think it's going to be that much. I don't think it's something that I would wait for sure. Time will tell. Maybe we'll have a drone scoop down and take us all to Mars, and then it's not going to matter. Who knows? Clark thinks the rates will be in the 6s unless something happens. Yeah, I think that's a safe bet, Clark. Yep. And there you go. They are not building the right houses. We need more affordable housing down here. I just don't. Yeah. Somebody needs to get the memo. Some builders need to get the memo. We need to there needs to be something to incentivize these home builders to do what needs to be done. Anyways, it says, she says that buyers should be ready for a year with plenty of ups and downs in the mortgage rates. We're kind of used to that by now, aren't we? Both the Fed and markets will be in reaction mode as new data comes in. I think that's what's going to happen after January 20th. I think the whole month of January into February is all going to be reaction mode because whenever there's a new administration coming into the White House, the markets are all going to wait and see what happens. The rental market offers better news for tenants. This was interesting, and we could kind of see this coming. This has been something that's in development for a bit, over the last several months, with the rental market easing up and rental prices coming down. This is according to Redfin chief economist Daryl Fairweather. New apartment supply from pandemic-era construction should keep rents flat in 2025. Rising wages will improve rental affordability even as home purchases remain out of reach. Now, before you go crazy and say that, wages aren't rising and so forth, I think that the unemployment numbers are skewed. I definitely I do believe that. I actually was reading an article today about there's the employed, and then there's people that are employed, but then there are people that were unemployed but took a lesser job because either that's all they could do, or maybe they did it by design. But their wages actually decreased. So I mean, do we hope that the wages, cost of living increases and all the things, that wages will, increase? Let's hope. Let's hope. We'll see. There might be a lot of government officials looking for jobs after January 20th, but we'll see. I don't know. Homeowners who delayed selling and amid high rates are now showing signs of listing their properties. We have seen this. Walsh notes that this trend coincides with new construction reaching the market, potentially helping recalibrate the wages and bring the market a little bit closer to balance. I didn't, to be honest, I didn't quite understand how they tied those two things together. Recalibrating the wages with new construction coming. I'm not quite certain where the tie-in there is, but I will say that I'll comment on the listing. So, as you guys, that are veterans of this channel, full supporters, which I so very much appreciate, and those that are watching it for the first time. So, one of the services I provide as being a veteran in the business and having a very, very high BS meter. I have a pretty high standard for real estate agent, and that's why I think that like over 80% of the agents in our industry, they're not worth a fraction of what they're getting paid. But there is a small percentage that are worth every penny that you're paying them. True pros. And it's a minority, and it's sad, but it is what it is. And when I say I have a high BS meter, I mean, I can sniff them out. I can sniff out the 80% from a mile away because I'm in the market. I'm an active real estate agent, and I've seen it over the last 10 to 15 years. It's been gross. And because of that, I put together a group of agents across the country. When I want to refer, business myself, that's who I reach out to. And one of the services that I provide on this channel, I do get a referral fee. I'm gonna be transparent. Always, I want to be transparent with you. I like to have food with my meals as well. But it's no cost to you. That's part of the business. That's always been part of the agreement between two real estate agents. When I reach out to one of my preferred partners and vet them out and match them with an agent, they will, if all the stars align and it works out and the seller or the buyer choose to work with that agent, and it comes to fruition, then they send me a little piece, of their commission. Nothing goes back to the buyer or seller. But the number of people, and if you're interested, there's a link in the description, but the number of people that have reached out that are looking for referrals to listing agents through that service that I provide has absolutely increased substantially over the last 3 or 4 months, substantially. And a lot of those folks are waiting until the spring. So that's my data. That's my front lines, Warzone front lines data is that I can tell you without a shadow of a doubt, and some of my trusted pros in this business, all you guys know about Jackie Baker. Jackie Baker and I are very, very, very good friends. And we talk all the time. She's seeing the same thing on her channel as well. So I agree with that assessment 100%. David says that I think rates will be about 6.5%, 7%, but that is a complete wild guess. I think, you know what? I think all the things are wild guess. Let's get on to, so we got this going on with this poll here. So, all right. We're going to do the poll. And so with the live stream poll, what do you think will happen with housing inventory in 2025? Hold on a second. I gotta, oh, do I have a drum roll? I don't have oh, I do. There was 48% of you said slight increase. A 41% said a significant increase. Interesting. 7% said slight decrease. 3% said significant decrease. So 40% slight increase. I'm on board with that. I'm on board with that in terms of the housing inventory. I don't think the market's going to be flooded. I don't think that is, that's something that is realistic or foreseen at this point. I just think that we're too much in a deficit. Just for curiosities here, I ran a poll on my put a poll out in the community earlier today asking for folks that are willing to sell, looking to sell this year, and this kind of backs up what I was just talking about with, folks that are thinking of making a move, and, just curiosity, and, if they were thinking about moving, and so there's a lot of mumblings in the real estate prices falling, sellers getting anxious about selling. And it says, are you planning to sell sell your home in 2025? 33% said yes, regardless of what the market does. And that's often very true. If there's a need to move, you will move regardless. If everything else, of course, falls in line. 33% said that, yes, if the market conditions are right. And 33%, this is very interesting, 33% said, no way, sitting tight and holding on to my low mortgage rate. So this poll is split a third. Super interesting. Super, super interesting. So once again, I just wanted to throw this up on the screen here, that if you guys need a referral, if you are thinking about selling and you need to I always recommend interviewing 3 agents. Always, even if your best friend referred you the agent they use and they love them. Get some alternate opinions, because just because someone referred you, I wouldn't, necessarily want you to just count on my referral. I mean, I vetted the agent and I'm in the business, and I vetted them in a certain way. Not everybody vets agents the same way. And even when you vet them, they may not be a good fit for you. And it's always good. And even if you come back to the person that you initially were going to use, it's great to have backup information so you can compare. Always compare. You got to do your due diligence. 100%. So, I think, unless you guys have any more questions, I think we're going to rock it out and say my goodbyes. So, hey, this has been a great conversation. I really appreciate all you guys. And it's going to be very interesting to see what happens in the housing market with the new inventory, new construction, and whatnot coming up in the year. We will be having more discussions about it for sure. And yeah, in the months ahead. But I always appreciate you guys being on the stream and joining me in these conversations, especially my regulars. But hey, listen, have a great week. Be good, be kind to your neighbors, be patient with everybody out there, especially, and be careful. Those that are dealing with all that freakish snow weather in the Midwest and so forth. Like, you guys, just be careful. Please be careful. Stay warm, stay safe. And we'll see you next week, Tuesday, 6 p.m. Have a great night. See ya.